Hello everyone. Happy Sunday. Hope everybody is having good Sunday, good weekend to relax. So I wanted to bring some of these my the new videos that I'm going to start related to the education for the new traders, or as well as for the experienced traders who are still having struggling, right? So, in part of this series that I'm starting, today I'm bringing to you what I call as building blocks, Ripster's building blocks of a trading success. We can talk about a lot of things. We can talk about strategies, this and that. That all comes later. But first of all, what we have to do is we need a process that changes our mentality from greed oriented to process oriented and goals oriented. So it might sound too overwhelming, but it's not. What this is basically it changes your mentality and keeps you grounded, and also helps you have a good risk management in stock market. And at the same time, it helps you see your growth, your consistency, what is working, what is not, and understand the process. So what is this? So these are four building blocks for your success in trading. So let's talk about them one by one. And trust me, once by end of this video, you will have you would have a very good understanding of what I was talking about, and you will realize that yes, this is something that I never thought about. This is something that I was not doing or utilizing as part of my trading. So Ripster's four blocks of trading success. Those are risk. The first is risk. The second is system. Third is setups. And then fourth is goals, right? There's no particular order, but they need to be, you need to have all of them clearly defined for yourself. Either you are trading, investing, short trader, long trader, either you are a commodities, forex, any kind of trader. It does not matter, because you just once you have this process clearly defined, then you can reach your goals in a good way. Because what's happening is we come into the market, right? Just example of everyone who is still struggling, or even me back in the day. We come in the stock market, we just want to make money, right? And we have heard from everyone. Oh, my uncle told he made some good money on Amazon. Hey, my cousin, his friend made some good money and he left his job, he's doing good. So I want to try it too. Maybe I want to give myself a better life if I can control my destiny. And we come into the market and we just we learn few things, and we just learn how to get on the broker, and on those things are different, right? Those things which like the charting, the broker, understanding the basics, buying, selling, when to those are very basic things which I can talk about later. But anyways, once we come into the market, we are just trying to we have a few good trades, we made some money, beginner's luck, and then we start losing. We lost in one or two trades, and then we're like, well, I made some money initially and now I'm losing. Maybe I need something else. Maybe I need alerts. Oh, that guy is doing good alerts, maybe I need to follow him. Or maybe I read about this company, it's a crazy company, it's the future tech, I'm just going to put all my portfolio there. That's the way to go, because everybody is saying that. The whole damn world is saying about this company, so why, how can it be wrong? And we maybe we do that, or maybe we just maybe we just see what someone else is trading and we just jump in. So we try to trade it, and guess what? We start losing. We start to lose what we just made. And then finally, we lose everything that we made. We are new to the market, had a little success. Then we went in little crazy. without with our gut feelings or our random trades, and then we lost everything. Now we have lost everything. Now things, we are thinking about the money. Our focus is all the money. We don't give a damn, or we don't give the shit about the process. And then we try to chase the money. And then how can I get all the money back? The money I lost, I just need to get that money back, and maybe then, maybe then I will leave. And then you revenge trade, oversize, because the stock market took all your money since you entered after your initial success, and then you are chasing the money. So then the process goes to shit. Nobody cares about the process. You just want your money back. Either way, that can be following somebody, or buying some alert service or investment service, or following some fundamental macro guru who says, okay, market is going to do that in 2 months. You load up on the options, whatever. The point is, you chase the money because you never had a process. So that cycle goes on. You make a little, you lose, and then you work hard, you fund, you start again, and then you keep in that circle. And maybe you had a success, you worked hard on something, 1 year you had a success, and then one trade wipes up everything you did for last 4 or 5 months or a year. So then you're back. This is a vicious circle, right? You one step ahead, two steps back. So that happens to everyone, happened to me. Yeah, it might be happening to few of you right now, even though we are in bull market, but we can never be complacent. So to avoid all this, right, I hope whoever is hearing my this listening to this video, to to not fall in this vicious circle or trap. You need to follow these, have these four building blocks, and stay with them, build them, stay with them, master them. So let's go one by one. So what is the first one? So the first one is risk. So risk is your risk per trade, or your daily risk, your monthly risk, or your so basically how much you're going to risk on a trade, per trade. And every trade you want to lose the same amount. Because what happens is, you make $100 here, you make $200 here, you make $300 there, you are so confident, and then you lose $800 on another trade. So basically wiped out what you made in last three trades. So that's you are not working on your risk block. You're not working on your the first fundamental, which is to always have a fixed risk. Now, how do you determine that risk, right? So the risk is determined by your account size, and you let the technicals dictate it. No matter you are a fundamental investor, doesn't matter you're investing long term, short term, the risk will always be defined by the technicals. You cannot just come and risk, okay, I'm going to risk 2% here, 3% there. Oh, my portfolio is this much, so I will risk 5%. Who cares? You go into a trading position, and let's say you buy, what do you buy? Okay, so let's say you buy something. Let's look at some daily charts, right? So let's say you buy Baba at 97, right? And you just randomly put like 5% account or whatever. And you randomly put a stop, and what happens is your random stop is right here, right? And or maybe just let's just take some other example. You randomly put a stop right here, and you stopped out, and the Baba bounced back above your entry. Why? Because you randomly assigned a risk, which is not the way. You have to analyze the technicals, right? So what does the technical say? If you're a long-term investor, this is your long-term support. This is your long-term support. So this technical risk level will dictate how much you will lose. You will lose the same amount. And right, try to understand. I will post about my tweet about the position sizing after this. I will share with you. You will because today I just want to go over this high level over these four blocks, but later we will talk about each one. So you will always lose. Let's say you are losing $1,000. If you are closer to the stop, you can size more, right? Let's say your stop is $1. If your stop is $1, you and your risk is 1,000, so yes, you can risk that $1 and for 1,000 shares, and then you let it work. But if you are adding somewhere here your $3 stop, then you cannot have 1,000 shares, because by the time you stop out you will lose 3,000. And remember, your risk was 1,000. So the point is, your risk always remains the same. How much you size changes. The one variable that will change is your size. Your dollar amount you lose always will remain the same. With investment, even if you're short trading, if you're options trading, whatever you do, your dollar amount should be, try to keep it the same lose every time, right? So even if some positions as an investor, you might add those positions more, you want to risk more on that because you're more confident, but always try to have a defined risk level on the technicals, right? So so always have a fixed R. Target to make at least 2 R on every. Risk is how much you can lose: 1,000, 5,000, 10,000, 100, whatever. But try to make at least two times. But try to make at least two times of that target. So try to make at least 2 R. Identify that R and make sure you don't lose more than that, because once you let that R getting out of hand, then all your winners will be wiped out with one loss. And always remember, technicals dictate the risk and the reward. No random percentage risk. Calculate your risk first, and then that's when you size accordingly, and accordingly you find your reward. Now that's the first block. Okay, so you have to work on your risk side. Always take a paper, pen, make a note. This is much your risk account, this much you can lose. Now go into each trade and figure out your technicals. Don't ever chase. Even if you chase, then you remember, if you are far from the risk, you have to size one third, one fourth, because you never really want to lose more than your defined risk. And if you think, let's say you are adding a stock at 10, which started running from 5, and you are thinking your risk is like $3, and stock maybe go up $1 more, then that's not worth it. More reward always calculate that. All right, so what is the second block of our trading success? So that is your system. So the most important, of course, risk is important, but so what is the system? So the system is the second most important block, which tells you when to enter, when to exit, when to long, when to go short, when to start taking profits, how to manage your position, how to manage the risk. System involves all the rules that help you have a conviction in your trade. It can be your technical system with with your fundamental research, and if you're a biotech trader, technicals and your biotech research conviction, right? So that is the system. So system tells you when to enter, when to exit, and it defines your conviction and your confidence in a particular trade. Either you are a long term investor, short term investor, short trader, whatever you are doing, that system tells you, right? So what is my system? My system is my cloud system that I invented, that thousands of people use, right? You can find your own system, or you find somebody's system and evolve with it. Be master your system. And then for me, support and resistance is the most important thing, right? And the price action. Find your system before you trade. Any trade, long or short. If your system doesn't confirm with your bias, your system has to confirm your bias. Don't go against the system, because if you go against the system, you will be doing random gut feeling trade, right? Chasing a stock just because it's running, that's not a system. Buying a stock because your uncle said this company is going to be $100 next year is not a system, right? So, and just means randomly cutting, randomly adding, randomly taking profit is not a system. So everything has to be a system. Your system tells you when to be bullish, when to be bearish. Find your system. Does not need to be complicated. Can, minimal indicators, more your screen time, price action. That's what you need, and master your system. And every system fails. Okay, every system fails. Doesn't mean that you jump to a next system, right? People try to find a system. Oh, maybe rips clouds are working, and they fail one time. No, no, I have to find something else. Somebody else is selling $1,000 system or an indicator. Oh yes, I have to buy that. Maybe that works. So, and you keep running around, running around. Take one system and, you know master it. When I was doing it right, when finally things started to click for me, was when I stopped looking at everyone. I devised my own system. I used online social media as a journal of all my trades, what is working, what is not working, and started clicking. And I had to stick with it, right? Whatever I do, if I do investments, I have my systems, and or if I do short trades, I have the system. So follow your system, find it, post in the comments what system you're using, and ask me. If I have any question, I will respond. Okay, let's go to the second part, setups. So third part, sorry, the setups. So what exactly is the setup? So system, system you understood, it tells you like how to enter, when to enter, when to exit. Setup is, will tell you what to trade. You can't wake up every day and go to your screens or your chat rooms or your communities and just blindly try to trade anything, right? You cannot chase what other people trading or some other person's setups. One person might be master of his setup, but you might not be master of that setup. So ask yourself, am I doing playing my setups? Like I always say, you go to a restaurant, right? You order food. Let's say you go to a restaurant, it's a rainy day today. You're like, today is rainy day, so maybe the wine will be good, so you order wine, right? So you go some other day, and it's very hot, and today it's, just like maybe have some beer. That's how the stock market is, right? It's, the market will have its different phases, bull trends, bearish trends, chop trends. Some of the setups don't work in chop bearish trends. Like you see the last year, a lot of those setups was not working. So I was talking about the setups. So you go to the restaurant and you have this kind of what you want to eat. It's the same thing when you wake up every morning. You need to have a book which tells you what setup. I play. A lot of people teach this thing as well. We call it as a playbook, right? You should know, if you're a short-term trader, what is your playbook. If you're an investor, what is your what setups are showing up today. Long term, short term. For example, like a simple concept of a long term investing is like investing versus psychological numbers, $50, $100. If I see a stock that I like that has fallen from 150 close to 100, I risk, I use that concept. If a stock is moving over 100, that's my psychological number investing. Or if it breaks, if a stock is an IPO, it's breaking the IPO lows, it's a short, because that is an IPO low short setup. So similarly, day trading, I have a different setups. I wake up, what I'm going to do, morning gap down, there's a setup. It's a gap down setup. It when it pulls to my EMAs, I know it can reject there my price levels. I know my system works with this setup pretty good, so I short it, right? It's multi-month lows, I short it. Then I have a 52-week breakouts. I open my playbook, I see a stock making a 52-week breakout, like Microsoft recently, or Nvidia, or so many other names, so I take them, right? Every setup has to be a repeatable setup all time for rest of your life. So take a piece of paper and a pen and write down your setups, and ask yourself, for the time you have been trading, were you just doing gut feeling trades, or did you really have some setups that you were following? Ask yourself that question, because if you can answer that question, means then yes, maybe there was few setups which work for you. So what you need to do is take out the setups which don't work, low probability setups. Like I was showing the other day in my trade recaps, going against the trend is still a setup versus a support, but it's a low probability setup. So cut the low probability setups out of your playbook and keep the high probability setups. So once you have this book of setups, you wake up, or you see a stock showing that setup, and you can take that setup and you only trade those 5 6 setups, and you can have consistency, and I promise you will have success in trading, because you will master your setups. You know your setups, nobody else. And then your setups have to be according to your own personality, your own, what is your psychology, right? So so this is your playbook, okay? You stick with your setups. If you cannot tell yourself what is the setup before you hit the button, you should not trade. Make it repeatable. Do not trade random. Cut bad setups or low probability setups. Keep your most profitable setups. Each setup is governed by a checklist like market trend, news, technicals, options, catalysts. If a low float setup has it's a short squeeze setup, or just an example. Following or chasing blindly on somebody's alerts, or if somebody tells you, is it's not a setup. You can take ideas from others and then see, oh, this person is giving this idea and it is actually a good setup that you also like, and it's also kind of a part of your playbook, right? So take ideas from others, but make sure you can identify the setup and you have previously used that setup for your nice consistent wins. All right. So okay, let's move to the next step. So next step is your goals. So the next step in the goals is how you achieve growth and reach your target. If you don't have risk management and a system and setups, you will never reach your goals. And what these 4 blocks do is it helps you control the emotions too. Trust me, if you start to focus on these 4 building blocks of trading success that I teach, then you will start to see a change, and you will be able to control your emotions, especially with the goals, right? When you lose, let's say you start in the morning, you are winning, and then you want to make some more profit, and you go in and then you have make some bad trades, and then you lose, and then you give back the profit, and then you go red, and then you want you want that red back, and you start revenge trading, and you eventually end the day red while you were green in the morning. Because you forget that what is your goal. Your goal is not just that one trade. Your goal is long term. Don't ever let that one trade define your complete career. So that's what happens. We make that one, sometimes we make that one trade define our complete career. Doesn't Don't be proud of the money you make in a fluke. It will eventually come back to bite you. So when you think about your goals, let's say you have a 1 year goal. If you lost a lot of money, you have to 1 year goal to recover the money step by step, following your risk system and setups. You put it in Excel. Like I always teach a lot of people who come talk to me, do sessions with me. So if even if you put, let's say, 2 days, even if you want to have a goal of $1,000 every day, if you keep the goal going, the $1,000 every day becomes 50,000 end of September, right? But you stick with that goal, even if you don't lose then more than your daily risk. Let's say you don't want to lose more than minus one 500. That's fine. you know don't get mad if you lost 500, because you're still on the goal. Just add one more day to your goal. Like, increase your goal time. But if you're red minus 100, don't panic and don't just go crazy trying to make more or make it back. That's fine, even if you have 2 minus 500 days, because that's your max risk. Someday you can have like 1500 and someday you can have 2000, if you play with your proper risk reward, right? So if I get crazy and mad because I lost minus 500, then minus 500 can become minus 2000, and then things become bad because that starts affecting your trade. Even then, if you have a really really bad day, come back, focus, make, extend your goals to some other day in the future, start fresh, and don't repeat this mistake that you did here, right? So yeah, so it will change your mentality. Have these goals in your mind, daily, weekly goals. Avoid deviating from the goals. If you have met your goal for the day, only risk that much that you can afford to lose. Even if you go red, uh, even after that you don't lose more than what you made, so you stay green. So avoid deviating from your goal and try to not get the overnight success. If you follow these things, then you will avoid the risky plays like taking lottos, chasing the stocks, going crazy, right? I will talk about those other things in my about emotions and psychology. When I'll have that session, we'll talk about emotions and psychology. But this is the goals I'm talking about right now. So have an Excel, journal it, okay? Make a Discord like I always show you guys. Make a Discord with all your journals so that you stay on your goals. Don't worry about one trade or one day as long as you are moving towards your bigger picture goal. If you are red, tell yourself it's just one trade, just one day. I still have my 2 year goal, my life goal, right? I can't make bad decisions because just my last trade went bad, right? So have that in your mind and you'll be fine. Trust me, you'll see the change. Stay strict with your risk rewards. Set up systems will help you attain these goals. If you do one, two, three, then you can achieve four. RSSG, you can achieve four. Your daily goal can be 4 hour if you're risking hour per trade, but you cannot lose more than you're trying to make. Like the Excel I showed you, you will lose it. Check my emotions log to stay in put and manage your emotions to get to these goals. The power of extrapolating your daily goals to a year will do wonders for you and your account growth, even if you have a red day. Just like I showed in this Excel, right? Even $100 a day, if you extrapolate it, you know, it will do wonders for you. Then you realize that I'm too focused on my 100 day, and then I can make 5 grand on my small account by end of September, just to give you an example. Review your goals time to time, evaluate what is working, what is not. Then you can scale your size, right? You can risk more as you grow. So yes. So guys, this was all about the 4 blocks of trading success, secret to success. I teach them again and again. I might teach them very separately, like in my tweets on my website, but whatever I do is all part of this 4 blocks, and it has been part of this from the years since I have been guiding people. And this is the only way you can achieve success. You can go change it, do whatever, but these things nobody tries to explain you. People might try to explain you, tell you, okay, come here, I can get you success, I have this program, I can get you that. It's all bullshit, guys. Yes, go to people, learn from me, learn from other good traders, but you have to develop and find your thing yourself. You have to have all these building blocks set in stone for you, that you can see and manage and look at again and again, and be control of your own destiny. Nobody else will be ever reason of your success, I have always say, right? So learn from everybody, go to all places, learn from them, So any good rooms there, or any successful, even any successful services are there. You go and learn from them, see what they are doing, what setups they are using. You don't necessarily have to take the ideas and trade blindly from everyone, but you can learn and see what they are doing, and adapt that and evolve. So it's all about evolution, right? Trading is, this is what it is. It's a discovery, and it's fun, but it's not fun sometimes too, trust me. But yeah, anyways, I just hope this helps, and I'll keep bringing more in this series. And might have one more swing recap video coming, maybe today or tomorrow. Keep eyes out, and yes, set your notifications on so that you see when I post, and spread the love, guys. And it's my website. I'm going to put a lot of content here. We'll go through this later sometime. There are a lot of trade recaps here, SPY, VIX trades, small cap trades. Yeah, a lot of stuff. We'll go through everything slowly. All right, guys, have fun. Take care. Sunday.